I'd like to welcome Gene Hoffman, the CEO of Chia Network Incorporated, who has recently been working on a new way to get access to the US stock market, particularly starting with Microsoft to the stage. Gene, welcome to the show.
Hey, thank you. Great for having me.
So we've digested a bit of what's been going on with Permuto, and we did like our first episode on this where we talked about it. And maybe to just start this show off, and we've got a follow up question. Could you just briefly describe what Permuto is doing as far as the trust and splitting the certificates and what's going on there?
Sure. And let me even back up a little bit more on like what is Permuto for those people who've like not heard all the details yet. So Permuto Capital is a joint venture between a group of guys who currently work for Kavu Securities, but they've formed a thing called 3V and Chia Network. These are the folks who were our lead left underwriters at Credit Suisse before it died after UBS bought it. And the idea is actually Trent Martinson's, who has been on the team for quite a while, on at least the deal team. And even since college, he's always felt that the like pricing of stocks didn't make much sense as compared to like their dividend payout, especially in the very modern era where these big tech and other companies are paying dividends and the value of the company probably correct as the value of the company, but totally like ignores um, the dividend yield. How much is that dividend paying out? So the idea was, hey, look, what could we do something that would allow investors to be able to split up a share of Microsoft into just the dividend payments? And that's a kind of in perpetuity. So as long as the underlying company is still paying dividend payments, you just get that dividend payment. And then the rest. So in other words, we call it an appreciation certificate, but it's basically all of a stock except for the dividend rights. And the thing about these dividend payments is it's really easy in finance. There's a couple different ways you do it: a just kind of cash flow model, a growing annuity model. But these are really basic models that finance folks understand pretty easily to value what a purchase of that dividend cash flow would be. And when you run that model, different people will use different kind of assumptions in it, but you're still going to end up with about the same set of assumptions, and so you can kind of actually make a market. And so, trying to come to us, and I had sat down and figured out a regulatory path for this. We thought it made a ton of sense from an administrative perspective to use the blockchain as well, but it became clearer and clearer that we could also allow national market exchange at the same time. It was an idea that I had had a while back to allow us Chia Network stock to trade on chain once we were public. And so when we put all this together, we came up with a really fascinating product. And so we have filed an S1 with the Security Exchange Commission last week. uh, you know, we believe that the usual kind of corporate turnaround is 3 to 4 months, and we have reasons to believe, though obviously can't guarantee it, that that will be kind of the general timeline. You won't actually see our interaction with the SEC until after it's effective, but you will see our new filings, so you'll know that we've made changes and request comments from the SEC. So very excited. I want to underline this as the first. We are intentionally kind of the first one's the expensive and hard one. The rest of them are quite simple comparatively once you get through the process with that first one. And so, there's a host of equities on national markets that we think have these, characteristics. They're growth or at least prospective companies which have dividends or even high dividends, and those are going to be the first wave. But ultimately, we expect to get quite a few stocks like this in, and create this kind of new dual market on a national exchange and on the J blockchain.
So talking about the actual splitting into the dividend certificate and the appreciation certificate. So the dividend certificate is the part of the stock that carries the dividend, and then the appreciation certificate is the leftover portion of the company, which is what we would normally think about a lot of companies, which is the value goes up over time, hopefully because the company's doing better or whatever. So, who do you foresee as the investors that will want to use this bridge that you've created to deposit stocks? And what do you foresee as it enabling of splitting it into these two pieces?
Well, so there's a couple things here, and one of the key things to understand is that by doing this, you actually make Microsoft stock more attractive to more investors. So let me explain that. Right now, there are a lot of like institutions, think insurance companies, pension funds, where cash flow is really important to them. And they'd like to get whatever cash flow they could get with, kind of high yield and low risk. And, the classic version of that, like, obviously, is a treasury bill. But, right now and then historically, Microsoft has kind of performed better than treasuries. And, some investors, I believe, will feel that Microsoft isn't that much more risky than Treasury bill. So your whole class of investors, like insurance companies, who never would have thought of buying Microsoft stock as the regular Microsoft stock, now will seriously consider buying just the dividend. And then on the other side, there's kind of two key users, but there's quite a few users generally. Like, so if you believe that over time Microsoft is going up, and especially like if you're young, if you're an early investor in your investment career, the dividends are not very tax efficient because you're paying taxes every year on the dividend, and it's like an administrative headache, and it's actually kind of, oddly enough, in the structure, holding back how much you're making. So by taking the dividend out of the underlying equity, it kind of has what Misha's termed natural leverage. And so the idea is that if Microsoft goes up 1% on the Nasdaq, that the dividend certificate will probably go up about 1.1%. Now, in key, it'll also go down faster. But the whole point is that you've got the ability to really focus on the part of the investment you care about. And in fact, there's kind of an investor journey for individuals, which starts out when you're young, you buy the dividend certificates. When you get to middle age, you start to balance them out by buying some. I said that wrong. I'm sorry. You buy the appreciation certificate. When you get to middle age, you balance it out by buying some dividend certificate. And when you get to near retirement, you actually start selling the appreciation certificates for long-term capital gains and buying more of the dividend certificates to have more cash flow in retirement. The other big players here are just hedge funds. A lot of these hedge funds really don't want the dividend. It's, again, for them, administrative pain. They'd rather have accelerated appreciation or depreciation. And so this is a really interesting instrument for them. We also expect a lot of exchange traded funds and others who are trying to do like dividend strategies to now have kind of like these direct element exposures. And so, yeah, they might have to amend their own filings to be able to accept these, but it's going to be pretty easy for them to get comfortable with the idea that they could use this to track, or maybe even better, like an index that they're trying to follow.
So as far as the actual trust itself, there's fees associated with the trust. Is that primarily where Permuto Capital is making money, is interactions with this trust bridge?
Yes. So there's two T's you could care about, two categories of fees. There's creation and instruction of trust certificates, and then there's the ongoing annual fee. It is not an AUM. So a lot of people are used to like ETFs charging AUM. In other words, they say, hey, have all the assets under management, so AUM means we're going to charge you X percent. We're not doing that. Wouldn't work because you want to have, there's 100,000 Microsoft shares there. You want another 100,000 to be there at the end of the year. Um, on creation, we're going to charge about 0.5%, and on exit, we're going to charge about 1%. But the people going to be paying that are QIBs, qualified institutional buyers. Think Goldman Sachs, Morgan Stanley, some of the insurance companies, because they are themselves QIBs. So they're going to be putting shares in. The way most people interact with this is they're going to buy it on the secondary market. If you buy the appreciation certificates on the secondary market, you pay no fees. You only pay the fees you usually do to pay any stock. So you can hold them for decades, and unless you try to redeem, you'll pay no fees at all. And the things you wouldn't redeem, you would just sell them into the market when you wanted to leave. On the dividend certificates, we're going to charge 20% of the annual dividends or 10% of the annual dividends on traditional versus the Chia blockchain. And so, the way to think about that is you're probably not going to effectively pay that fee. Let me explain what I mean by that. Any good investor is going to look at the actual cash flows they get after the fee, and they're going to value the underlying dividend certificate based on that. So it doesn't even really come out of the investor's pocket. It just kind of discounts the dividend certificate, which would actually just slightly increase the value of the appreciation certificate. But the whole point here is that the ongoing dividend payments from these large dividend payers are kind of the annual recurring revenues for Bermuda to make sure that we can pay the auditors and the lawyers, and especially on the DTCC side, tax administration. In the traditional world, the tax stuff is hard. On the blockchain, it's much, much easier, which is kind of funny and I think counterintuitive to some. But it's just so much cheaper over the chain. And so, we're making it so that investors can make their own decision here. If the blockchain is too scary for right now, hey, use it traditionally. We're just going to have to charge you more because it's going to be more expensive for us to deliver that. And so what we expect is, some portion initially when we launch this will be on chain, but not a lot. But then we're going to go back to the largest holders, especially of dividend certificates, and explain to them how much more money they can make by moving over to the Chia blockchain. And we think that's going to be a really awesome customer base to go lead prospect in.
So when it comes to interactions with the bridge, what is the relative time scale for either putting something in or getting something out? Are we talking it's minutes? Is it hours? Is it days? Like, what is the relative speed of interacting with the trust bridge infrastructure?
So there's actually two bridges, and I want to make sure that's clear. So there's one bridge, which is, hey, I've got Microsoft stock and I'd like to get trust certificates. That's generally a kind of same day thing. So as long as you get your order in the morning, we'll generally be able to deliver you the trust certificates by the end of the same business day. There's a different bridge, which is, hey, I've got dividend certificate from Microsoft sitting at E-Trade, and I'd like to move it to the Chia blockchain. We still expect that to be same day. Um, we're hoping to get it down to maybe same 2 hour, so that you really can just move. But I think same day is going to work pretty well for the near future. It's market makers that we want to be able to have that ladder bridge move really quickly with.
Can you talk more about market makers? Because market makers in the traditional stock world are what's making the market, providing liquidity. It's one of the primary entities that makes the stock market feel really responsive. So once things have moved into the world of cats, do you foresee that an entity like that is going to start existing in the Chia ecosystem, or are we really hoping for automated market makers and smart contracts to facilitate that kind of stuff?
Well, the first thing is that automated market makers are everywhere. And I don't mean AMMs in the bet swap sense. I mean AMMs in most any market maker I've ever met is now pretty highly automated with, just humans kind of keeping an eye on it. But um, we're our market maker on the Chia blockchain is in testing on making the USDC versus XCH market like last week. So it's something we've been pushing them on because we wanted to be able to get that market made. And then once they had the general ability to make a market pair on Chia, they're also they are regulated correctly so that they can also participate in the securities market. So in fact, the Chia market maker can actually make a market that includes the NYS, pardon me, the national market side, the Nasdaq side from Microsoft, and the Chia blockchain. And obviously, we are deeply engaged with the traditional large market makers on the traditional side, and they aren't, how do you put this, unaware of what the future looks like. So it would not surprise us if they come in and are on both sides, both on the national market side of these trust certificates and on the geo blockchain side.
For them to automate in the way that they've automated in the traditional stock infrastructure, they need to have some amount of Chia expertise to do that, right?
That's
I
correct.
mean,
I hear there's some people around here that have some Chia expertise that we like to lend out to large companies.
well, that's kind of where I was going with that. Is it seems like there's some need for that if the software that traditionally exists to do this within the NYSE or the Nasdaq, that there's some adaptation that they're going to need to do. Maybe not their entire set of software, but definitely a piece of it. Is that how you view that market maker technology coming over to one market? Is it's an adaptation, and you're gonna or that CNI could facilitate that?
Yes, and I also say that the way you're going to trade on the Geo blockchain is going to be subtly different than the way you trade on the national markets, just because of 55-second total block times. Right. So, you're going to have to fine tune, not valid after, and those kinds of things. So it's going to take a little learning, but these guys are pros. They're going to figure it out pretty darn quickly. And I expect, for example, the existing crypto market maker in the G ecosystem is going to figure it out pretty quickly. So there's some kind of logic changes, but after that, it's not that different than any other kind of centralized exchange when you really think about it.
So in the infrastructure that's set up with Permuto and Microsoft and the trust, there is an ability to tap into an international market. Can you speak a little bit to the importance of getting access to international markets that doesn't really exist right now in the way that stocks trade?
Well, so, I would say this, international markets are not our focus, but it's an interesting side note. And I think the best way to put it is if you're even a sophisticated financial person who lives in Southeast Asia in a, G70 adjacent country, you don't really like buying American stocks because the dividend makes your taxes complicated. And so being able to buy just the appreciation certificate, it only is taxed on sale, so only on gains, right? And that's just so much simpler. Each year you don't have to deal with the tax headache until you sell. And by the way, that happens to non-international folks too. There are certain types of funds that really like can't take the cash in, and so they have to do these crazy things with folks like Goldman or Morgan to like make the cash go away. And this is just so much easier and cheaper than that.
But when you say it's a side note, you're not saying like that the 300 million Americans that are normally engaging in the US stock market, that opening up to the 8 billion people or whatever that exists on the planet, that's not the primary focus. I think the word you said, that's a side note. So that
That's
you
a
don't.
really nice to have, but it is not the critical thing. Because again, a lot of the people who are going to drive the volume of this are institutions. You don't know it, but you're invested in the institution that's going to buy it because they know why they want to buy it.
So in the infrastructure of setting this up, the DTCC is still involved. Can you speak a little bit about how does this work mechanically? So US Bank is the custodian. Does that mean that they have an account with the DTCC and that's where the shares are actually being held? Or can you speak a little bit to just how US Bank interacts with Permuto and the DTCC?
Yeah, and let me again kind of back up because not everybody even knows what DTCC is. So it turns out in the United States, if you own stock, you don't. Cede and Company, which is the official name of the Depository Trust Company, owns it in the DTCC, which I don't remember what the second C is, but basically in the same way that you can like wire cash between two bank accounts, you can electronically transfer stock between two brokerage firms or transfer agents or custodians like US Bank. So in fact, if you read, you'll see on the deposit process, basically what happens is you go in and say, hey, I want to create 100 trust certificates. And then we give you DWAC information. This is the name of the system that actually transfers the shares. And that DWAC's endpoint will be US Bank. So you will send the shares to US Bank. We monitor that. When we see those hit, then we confirm everything's right about it. And we issue you the trust certificates either on the DTCC side or on the Chia blockchain as you specified. Um, on DTCC, we're going to be using a transfer agent. These are very common. Every major company and a public company has one. We're using one of the big ones, though, finalizing that detail. And so when we create certificates, we just tell our transfer agent, hey, create 100 new dividend and appreciation, and then DWAC those to this brokerage firm, which is the brokerage firm our customer has, asked to have those certificates created in. Obviously, in Chia blockchain, much easier. We've enrolled your iPhone and know your vault ID, and we'll just drop it in your vault.
How much has that started to adjust as there have started to get to be blockchain-based issuance? So I think T0 and some other entities have started to dabble in the world of there are actually stocks that are represented by crypto. Are they still interacting with the DTCC? Do you know anything about that, or is that completely orthogonal to everything that's going on with Bermuda?
No, so in the past, there's been this pressure from certain regulatory entities to like make sure anything on blockchain wasn't real. And there's no legal basis for that. So it really takes an issuer. And by the way, Permuto is the issuer of the trust certificates. That's one of the key kind of regulatory insights about all this. And so as an issuer, you aren't restricted in the way like brokerage firms are, clearinghouses are, or national exchanges are. You can say, hey, I wanted to trade on a national market in the US and in Hong Kong and in Saudi Arabia or whatever. And by the way, the Chia blockchain is a valid choice in that list. And so we're the first issuer to be able to go prove that. We're very comfortable with that because again, an issuer can, especially once a registration statement's effective, kind of let their equity trade anywhere. Now, this also means, because I'll kind of answer a question this raises, that any public company can kind of do the same thing with their own equity. And it would not surprise us if we don't actually help some folks do it nearly directly. It's not as easy for them to do the dividend separate, but it is easier for them to make their one class of stock be both on chain and off. And there are all sorts of really good reasons, like much cheaper dividend payments, much easier voting, that just make a ton of sense when you're using the blockchain versus the traditional DTCC.
Does that mean that the importance of the DTCC starts to fade over time? Like, how important is the DTCC in the long term?
Well, look, I wrote this in the white paper and I believe it. Just like in the music business, where a lot of these kind of intermediaries thought that they were toast, it turns out they just had to evolve into a different technological beast. $2.5 quadrillion worth of securities and bonds all trade on DTCC globally each year. So it's not going away quick, but it really does get to, like, how do I put this? The administration of equity and dividends and voting and all of this stuff, nobody loves it, not even DTCC. And so, to the extent that we can all make this just so much easier, there's a bunch of like costs that are kind of hidden from you that get paid indirectly through your broker or through, you think you got no fees, but it's Citadel sitting on the other side buying your order flow, and that's where the fees are. Um, Anything we can do to make that significantly cheaper and easier is going to be a kind of big gain to liquidity, to total return, across all markets. So, the long term, I think it's more you see DTCC migrate into its future self, probably helped by somebody like Chia Network.
Um, so focusing on what CNI is particularly doing. So this is I think I heard it said that CNI is all hands on deck, making this happen. Can you talk
Yep.
a little bit about what the future looks like for CNI, given that the focus is entirely on what's going on with Permuto?
Yeah, but remember what's going on with Bermuda is really building Cloud Wallet out with its first enterprise customer. So it's really making sure that Cloud Wallet is going to be ready for both single vault and multi-signature vaults so that an organization can have, 5 people at the family office and maybe 3 of them can sign to transfer the equity, or maybe only one of them has to sign to transfer the stablecoin. It's that kind of custody and control agreements that are really important. So, 98%, 95% of the all hands on deck is chasing. Let's get Cloud Wallet ready with a Permuto front end on it, so that it's so for an insurance company investor, you kind of look at it and go, oh, this kind of feels like E-Trade. And, my security guy has looked at how the vault stuff works. And so I could use this day to day. That's kind of what we're aiming for with it. Now, there's a little bit of, there's some specific Permuto capabilities that we're managing as a technology developer for Permuto, but, those are just the like, I need to create a purchase order to create trust certificates, right? I need to create a purchase order to redeem trust certificates. So the integration to our transfer agent, the integration to the US bank, those are the things that are kind of not for everybody, but are critical to the Permuto app. But we also think that's kind of a generalizable set of tools because we think other people are going to want us to be able to talk to their transfer agent for them.
So as far as the the involvement of U.S. Bank, does U.S. Bank have to do much in the way of working with Chia blockchain technology, or are they firmly sitting within a world that they are very already comfortable with as far as they're dealing with the trust, they're dealing with the DTCC? Is all of this very well worn ground for them, or did they have to start doing stuff that was a little outside their wheelhouse with respect to onboarding some amount of Chia technology?
So they don't need to know anything about Chia. I mean, they do, obviously, and they're excited about it. And I don't know if you saw, they recently joined the Digital Chamber, which is where the new likely head of the SEC is on the working groups over there. So that was just an interesting observation. But yeah, no, what we were asking to do is a very traditional thing that a bank does with equities. These date back to ADRs, American Depository Receipts, that JP Morgan came up with to let a bank hold, like, a London company so that you could trade it in the United States. And so, the trust agreement with them was very kind of off the place. The only thing that was novel was the novel structure of our trust, because it's even simpler than what most people are doing. Like, usually an ETF has like multiple stocks and stuff like that. Where here was like, nope, Microsoft in, Microsoft out. That's it. And they're like, okay, we get it.
So when you selected US Bank, did you have like a cadre of banks or roster that you were looking through, or was there some relationship with U.S. Bank that made that particularly interesting as a partner to have involved in this entire infrastructure?
Well, so the great thing about the Permuto team is it spans technology and investment banking and fund management for a very long time. And so we had a short list of folks where we had personal relationships, often on the 3V Capital side of Permuto. And one of the real big drivers actually was we were moving very quickly. We needed to get this done over the holidays. It was a no break situation for the Permuto team because we kind of got the regulatory green light internally uh, November. So it was, how quickly can get this S1 done. And so that actually drove a little bit of the decision just because we happen to had a really good personal relationship there. And, you can kind of tell when a vendor wants something and they wanted it. So that was exciting.
Can you talk a little bit about CNI's interactions with Permuto? So we've seen CNI do some really interesting stuff, say make an investment in Berkeley Compute. Was the structure of the interaction and the investment within Permuto similar to Berkeley, or is it more that CNI was providing a lot of expertise and sweat equity and legal expertise and just mostly was enabling this to exist because you guys had all the expertise on the legal side to be able to craft this very thorough S1?
So it's a little bit beyond that. Like I want to point out something. People don't necessarily think about this, but Misha, my CFO, used to run the entire Asian infrastructure for a major US hedge fund. And the hedge fund he ran wasn't exactly small. So, on the Chia Network executive team are people who know this industry very, very well. I'm weird because having been a public company CEO before, I learned how the plumbing works, if you will. And so I have more than just kind of like a technologist view or capabilities. I'm out there kind of teaching investment bankers how the actual back office works. And so, it made a lot more sense that you needed both the former Credit Suisse folks and us in a kind of, day to day, but part time. I mean, we still have day jobs, right? To really make this work. And then ultimately, we're going to hire a small team of operational folks kind of below the executive team. And, it's an interesting, profitable little business that rolls out new trusts with new equities that now trade on a national exchange and on the Chia blockchain.
But as far as the investment side, it sounds like it is on the there are people from within CNI that had these very particular experiences that made it so that you guys could set the thing up that was needed, but there's not a direct like allocation of Chia or something like that that
Oh,
needed
no,
to
no,
be.
no, 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 no. And as a joint venture, we both have day jobs and so we both have business accounts. And so we're just kind of splitting expenses until there's cash flow. I mean, it's a true JV in that sense, right?
Right.
Yeah,
So
and like how do I put this? Like Berkeley Compute, love them. They're going to do great. They don't need me day to day. Permuto, for a while, needs some of my attention. Pretty every day.
so you've talked a little bit about what the timelines are for getting this thing launched and how much needs to get swooped up to make the market relatively liquid and kind of all that stuff. Can you tell us again, or can you clarify when you think that this is going to start coming online? Are we looking towards summer of 2025, or is it going to be sooner than that?
Yeah, I have to caveat with, obviously things can change and we do not have control of the schedule, but we have a couple reasons to believe that we can get this done in the first half of the year. And, that's partially because, how do I put it? It isn't novel. There are only a couple issues to it. It's, is that structure correctly exempt from the 40 Act? It is, but that'll be a thing we'll have to talk about. The Chia part of it isn't a very big deal because the SEC has seen it before. As I told everybody, we've gone through a process and we are nearing the very end of that process. It would be over faster if we thought the market conditions were right for us just yet. But we believe that launching a few of these trusts is going to put CNI in a very different market position in a very positive way. And so that therefore we go through then. But my point is that, people are kind of, without knowing much about the story, look at it and go, the blockchain is going to scare the SEC. And it's like, well, no, they've seen it before. They will certainly have a, oh, you're not kidding kind of response. So it would not surprise me we get a few questions. But also, we got through the current regime as of yesterday's SEC. Like, I believe it's public knowledge that Crypto Mom is going to be the acting interim chair of the SEC, Esther. The likely appointee is, as I said, in one of the major blockchain commerce groups. Like, I'm pretty confident that the SEC is going to do the good things they do, which is bring a tremendous amount of accounting and market structure knowledge. One of the things we're looking forward to is actually constructive criticism in Schedule 2 of the voting trust agreement about how all these possible corporate actions can work. Because Microsoft is unlikely to have a bunch of corporate actions that could possibly happen, but we're building a tool that works on any company. And some of the smaller companies than Microsoft, remember, Microsoft is larger than crypto. Like there's 3.4 trillion. I guess we're up to 3.2 trillion on crypto. Uh, you know, but if you're talking about a more normal, like $50 billion company or even $500 billion company, they might get bought, or they might do a weird dividend of like their data centers. I don't know, and we need to be able to handle that.
One of the things that I think you and I had a chance to talk about was the appetite for companies to work directly with Permuto to put some of their own stock into the trust, into a trust, so that they can liquidize some portion of what they've got. Can you speak a little bit to what that process is? A company, do they look just like a Quib? Is it the same
Yeah.
thing, or is there anything particular if a company says we want to put 9% of our shares into a trust to enable them to trade in one market?
Yeah, look, as a company, you can raise a little money there, maybe not a lot, but it's pretty easy to do if you're already a registrant. You file S3 and you just hand us the shares. The interesting there is that it's not clear that when we're working with the company, we really need a custodian because the company can custody their own shares by marketing them to us and we own them and they can just sit there with the company. And if they lose them, they can reprint them. So, there's some interesting things in the future that we already have thought about to kind of uh, accelerate, heighten, make more efficient the structure. But for companies like, so, we have been approached by at least one company that is like, wow, that's cool. And in fact, we kind of need it from an IR perspective. They're a company that's kind of in a weird spot where the market can't decide if they're a growth company or a dividend payer. And so they're kind of like, hey, why don't we just tell investors, choose independently, don't ask us. So you can imagine why that comes up once in a while. And so it was really kind of fascinating to have them be like, let's talk.
So I'm trying to twine that apart a little bit. So does that, when you say they don't need a custodian, that means they don't need U.S. Bank.
Right. Only in that case, because we're working directly with the company, right? Because think about it, what US Bank is doing is making sure you don't lose the Microsoft shares. Turns out Microsoft is really good at not losing Microsoft shares. So we could contract with them. They would issue the stock and put the trust's name on it and just hold it. And we'll just trust them because I trust the underlying issuer. You do too if you buy these stocks, right?
Yeah, because they're the one that created it. I mean, that's
Right.
yeah.
And they have a process, just like we have a process to destroy and recreate them if they screw something up.
So thinking about some of these lines that you need to stay under, I think you said you've got a standard 10% because things start to look different or interesting. Is that because of the regulatory paperwork that's required? Is that why the 10% matters and you have to stay under that line? And does that matter if you're working directly with a company? So, like, if a company wanted to, could they put 20% in and it wouldn't matter? Or does that 10% line still matter for companies as well?
So we chose the 10% line. So let's be clear, it's not a like bright line that we have to stick with. We are pretty confident that if we don't have the company's participation, that we can't go above like 50%, because then you start getting into does the trust own the company, which is really weird. And you don't want to get too close to 50% because in a proxy fight, the trust could potentially be kind of used and weaponized for one side or the other of the proxy fight. And so we want to we're going to kind of stay under numbers that get us into those kinds of issues. But we also, we think without the company's involvement, we may be able to get as high as like 40%, 33%. But that's for another day. That's, a question we ask ourselves in 2026, maybe 2027. With the company, uh, because we have a direct contractual relationship, we may be able to clarify that we don't have ownership actually, which we don't, right, actively. So it does open up what those numbers look like potentially.
Because when the stock is sitting in the trust, you actually, I think you said the desire was that all the voting and all that kind of stuff actually flows downward to the individual, to the holders of the certificates themselves, right? It's not like,
That's right.
but the mechanics of that, do you just roll that into the trust and then the trust actually places the vote? Or tell us a little
Yeah,
bit of how that's going to work.
the trust mechanically places the vote. Now it does have one feature which I think people kind of missed, which is voter apathy's become a thing even beyond the fact that ETFs own most of these companies. And so what we're going to do is we're going to have a question presented by, say, Microsoft, and we're going to push that question out both the classic way to people who hold at E-Trade or Robinhood, and on chain and email, and you can vote either side. When we get all those votes together, we weigh the votes, but based on the proportional value of them. So, if the dividend certificate is trading at 50 and it's a $500 total, you're going to get 20% of the vote as a dividend certificate. The thing we're going to do is we're going to take the yays, nays, and actual abstains, not no votes. And we're going to take those and we're going to gross them up and vote the entire block of shares at US Bank on those ratios on each question. Now, that magnifying effect is fine if you're a minority shareholder. It just means that shareholders have a better voice there. But as you get closer to these control numbers, that magnifying effect could have, again, these weird corporate governance problems about proxy wars and takeovers and hostile takeovers. And we didn't want to get there. And in fact, it may be that if we go higher, we have to like stop amplifying the vote after a certain place, like maybe 33%. But that's an academic question we just kind of talk about over adult beverages.
How does that differ from how ETFs work, what you've just described? Is that the same way ETFs work, or like how does it work right now when stocks are sitting inside of an ETF?
The ETF votes for you. Hope you like what they think.
And they don't ask your opinion at all.
They
Like
do
there's
not.
nothing.
That's correct.
Do
That's
you?
one of the innovations here, is to really
Yeah,
pass these
yeah,
votes through.
yeah. I was just going to ask that. So do you view that as like a big differentiator in like what you're doing is actually enabling these questions to flow down versus ETF is not allowing it to flow down?
Exactly. I mean, look, this is one of the things, like, part of the reason the ETF doesn't want to flow it down is it's expensive and painful and annoying in the old world. Where if you had people holding on chain, it's not very expensive, nor is it painful to get people to vote. Because again, on chain, you have shareholder identity by de facto by knowing what their wallet or vault is. So like if the vote day is this block, whoever owned this equity in that block can sign their vote with the ownership credentials of that block, right? And so it's really powerful. And it's that block and earlier, obviously. But my point being, you now have this capability you didn't have before. And we love ETFs because they do one thing great, which is they drive down the AUM, the cost of annual management, but they don't let you get this vote pass through. And we think we can go cheaper than AUMs, especially on chain, and let the vote be administered on chain and just done.
So I think some of what you're describing in the value of the blockchain it is been referred to as a timestamp server, right? Is that there are actions that are very strongly coupled with specific events and time and the ability to couple those two things together. So do you view that as part of like the big uh, piece of what blockchain is making everything easier? Because this same property, I think you've said, makes tax accounting really, really simple too, right?
Yeah. Yeah. Look, the best way to think about it is like, if you look at the entire US stock markets, so NASDAQ, NICE, everybody else, if you're an issuer, you're generally kind of like on one or the other. And you don't really know who owns your stock at what size. All you know is that like Morgan Stanley has 8% and JP Morgan Chase has another 11%. They internally know who owns that stock. Some of it's theirs, some of it's one of their customers, private client guys. So if you want to go get everybody to vote, you actually have to push the vote to DTC, which pushes the vote to each of the brokerage firms, which pushes the votes down to your account, usually via email. On tax, this is even harder because if you're if you're an owner of the dividend certificate, you're going to need to schedule K1. It's going to look like what you get reported on 1099 div, but because of the way it's structured, you got to get a K1. So you're going to have to go up to the Permuto website and enter your social security number if you're in the traditional system, and we will have had a expensive institution go chase down who owned these dividend certificates on this day in all accounts in all brokerage firms around the world. Versus, we all are going to be able to know that block 8,432,000 is the vote block or the ex dividend block. If you own it in that block and earlier, you are the person who gets to vote. And you can prove to us you're the person who gets to vote. So you're going to show up for taxes and you're going to type in, you're going to present your vault or wallet, and we're going to immediately and then ask you for your social security number. And we've got all the data from the chain to know exactly what your tax implications were. And then we have the data, secondarily of did we withhold for you or not. And so we'll be able to generate you a K1 right then and there without having to ask anybody. We don't have to go chase around the world into every brokerage firm on the planet trying to figure out who the hell owns this.
So you're describing what to me sounds like some amount of reporting and tools that are all firmly rooted in the Chia blockchain technology, because it's looking at blocks, it's figuring out what happened in a particular block. Is this technology that CNI is going to be building for Permuto and then it's going to roll through that? Or is this CNI tech that's going to go on the core roadmap and then you're going to use these types of tools for a variety of different customers?
Yeah, look, being able to drop a secure the bag at scale and figure out who owned what when, that's something everybody needs. So we're going to write it the first time at scale in Cloud Wallet for Permuto, but is absolutely the intent underneath to like treat Permuto as a well-known customer. And we joke internally that I put my Permuto hat on as here are the requirements, but I take it off about okay, so how do we get these requirements done in a way that can be generalized to anybody beyond Permuto? Because again, a whole bunch of the stuff is just key capabilities of blockchain. And like there's a thing that I want to point out. Like people look at the blockchain and go, oh my God, scary Wild West. The blockchain is an immutable, auditable record of every single transaction, every single source of funds. And so people are like, what happens if people, do fraudulent wash trading and commit securities fraud on the Chia blockchain? I'm like, well, the enforcement side of the SEC looks at the blockchain and figures out you did bad and figures out what central exchange you brought your stable coin or whatever other capital on and sends a subpoena to them and they get your KYC information. You're going to knock on the door from a very unfriendly person from the Department of Justice. Good luck.
Very interesting. So one last thing, and then I think we're out of time. So the picture that we've got up is a picture of the old pit when people would trade things on slips of paper. And I think you've said some things about suitcases full of cash, and that's still a reasonable way to buy stock, and that Chia offer files are kind of like that. Can you maybe just make a statement about that, and then that I think that's the last thing that we've got time for, because offer files in some way were critical to all of this, and I don't think we gave it any due justice. But I'd at least just love if you could say a little bit about why offers were so critical to getting this all done.
Yeah, absolutely. So let's back up. One of the things that, bends even our partners' minds is that it's like, even today, if you, Grant, have 100 shares of Microsoft, and I bring a large enough briefcase full of cash to your office, you sign the back of it, just like you're signing the pink slip of a title of a car. And I hand you the cash and you hand me the certificate. And we walk away. And by the way, that trades 24/7, 365, because even if we're weird and want to go out after drinks and buy stock at 2 in the morning, we can. And Offer Files is with Splash, which is a peer-to-peer decentralized network that pushes offer files around the world. It's one big open outcry market. As long as people are awake, they can hear the open outcry of, hey, I'll buy a Microsoft dividend certificate for 42, please. And if you like it, great. And if you don't, you ignore it. And so all of a sudden, you're proposing over the counter peer to peer transactions, which from a legal perspective are exactly like a briefcase full of cash. The difference is you don't have to meet the guy and maybe have a wrench attack on the other side of bringing your briefcase full of cash to that office. The offer makes it so that no one can take it from you unless and until they give you exactly what you're asking for. So offers creates this trading capability, and if you're on other chains, most every other chain, it's peer to centralized smart contract to peer. And there are real legal questions about whether that centralized smart contract is itself an exchange, is it a clearinghouse, how much custody does it take? Did they really let go of control of it? Like in Tornado Cash, the Tornado Cash prize probably did, but there's a bunch more questions about all of these because everybody's always nervous about upgrade, and so they keep upgrade rights, and it's a mess. And showing offers on stage on an iPad in some of the most important conference rooms on the planet causes these light bulbs to just go off to people. They're just like, oh, now I get why you can trade peer to peer. And that means, and oh, and it's especially great for the dividend certificates. And the reason I say that is that a lot of the dividend certificate buying volume is going to buy it and hold it for a couple decades. But it's really nice if you have the knowledge that that, if you needed to, for whatever weird reason, at, 7 p.m. Central Time, where all the rest of the markets are closed, be able to go and get out of your position because you need cash for tomorrow morning. You can do that now.
Yeah, that's that old adage. You sell what you can. You don't sell what you want to. So now that you
Mhm.
have stocks available in a big hue and cry over the entire internet, now you might be able to get access to liquidity at a point when you really need it, and not necessarily waiting for the opening bells so that you have access to what you need when you need it.
Yeah, I
Gene,
mean, it's gonna move with the sun, right? Like, if it's like you're still gonna have the Pacific Ocean lull, which we always talk about blockchain fees too, right? But now you can wait for Asia and the Middle East to wake up, and now you've got enough buyers on the other side to be able to move real volume of some of these things.
Well, always a great conversation. Loved discussing this with you. And I'm glad we got this last question in because sometimes we hear people say, why Chia? And I think that this really does wrap it up in a nutshell. This is tremendously hard to do on a lot of different chains because there is no focus on decentralization because the way tokens are structured, there's on a coin set model. There isn't the ability to do pure peer-to-peer trades. Offer files are one of the big differentiators in the Chia ecosystem. I'm really happy that we had a chance for you to say something about why it's so critical to what CNI is doing with Permuto.
Yeah, and look, I want to add one thing. A lot of folks, especially in the cheat ecosystem right now, are like, tell me what the silver bullet is. Tell me the one reason why no one will be able to replicate it. And it's like, in the real world, these reasons stack. It's like, okay, you solved that, but now you got 9 other things that the Chia blockchain and the Permuto structure does better than yours. Good luck.
100%. Thanks for coming, Gene. Really appreciate it. And we'll be keeping a very close eye on what's going on with Permuto and looking forward to that approval of the S1 under the new administration.
Yeah, we're excited about that. Thank you very much, guys.
Thanks a lot.